Welcome to another video. If you're new to the channel, I'm a top author on the TradingView platform, as well as running an educational program and swing trading full-time with my students, specifically with the situation that there is around the world in the markets. What we are seeing increased volatility. And in this video, we will be speaking about how we can be trading using multi-time frame analysis and order flow in a situation like this. So the video will be very educational, and I suggest you to watch it until the end, because first we will be reviewing a position that we executed with students last week, and then we will be making a multi-time frame analysis and checking the order flow for how we can actually be capitalizing on the next move on the pair. So I will see you in the video. Okay, so let's start from how we actually took this nice position that we closed last week with students, and then what we will be doing is obviously making a multi-time frame analysis of the current situation on USDTHB and seeing how we can actually capitalize on the next move. So let's start from here. Now, how did we actually know, and how do we actually found a good high risk to reward setup here on USDTHB for a 1 to 4.24 risk to reward? So first of all, what was the situation from a daily perspective? Now, on the daily time frame, what do we clearly have? Now, we had a market that clearly was retesting exactly this area here, which is strong previous resistance here, now turn support here, and again support here. Now the market had hit this area twice, right? Once here and another time here. Now keep in mind that we are in a situation in which we have very high volatility in the market. Okay, moves are happening faster. And many people think, okay, but with all this thing of the coronavirus, maybe it's better not to trade. That is exactly what I don't want you guys to do. Having high volatility in the market, unless it's craziness, because that is a completely different thing, is good, because volatility equals opportunity in the market. So you have better opportunities if you have a volatile situation in the market. So what did we expect from here? When the market hit this area again, okay, you know that you have resistance, that is support. What do you expect? You want to see the market make a push to the upside. Why? For the simple fact that you can create this nice W formation, and you also have the possibility, obviously, to complete this impulse, correction, and impulse pattern to the upside. Now, what did we have from a CoT perspective? So what hedge funds were actually doing on the USD? So what we could see, this was the report that we had. What we could see is that overall is true. Hedge funds had 41,000 longs here, and they had reduced all the way down to 31,000. Okay, that is important to say. However, do you see all these longs closed backed by some proper shorting? No, right? You don't see any proper shorts. Minus 6K here, minus 1.4, minus 5K, but you don't see any adding. Okay, they're closing shorts and they're also closing long. So what does it mean? It means that they're not interested in the push to the downside yet, and they want to actually short from a better price. So what does it mean? That the market will actually make a move to the upside. Okay, then obviously we will factor in the next report, the one that we have now, when we'll actually analyze the live market situation and see how we can capitalize on the next move on this pair. So this was the situation, right? Now, another confluence factor that you had at this level. Now, keep in mind, if you want information on a leg in the market, okay, let's say I want information on this retracement. What do I have to do? I have to take my Fibonacci on the impulse, right? And in the same way, if I want information on the next impulse, I have to take my Fibonacci on the retracement, always the previous leg, to have the most accurate Fibonacci placement. So how do you actually know where are the strong levels of Fibonacci in this case? Well, it's pretty simple. Follow this move from the high to the low. Where is the low? It's here, right? So you take your Fibonacci from the low to the high, and what you will get? You will get a market that is clearly testing the Fibonacci levels one by one. Very, very important thing to say. What do you have here? 78.6 at this level, 61.8 here. And what does it mean? It means that the market is moving by steps. And when the market moves by steps, there is a very high probability that it will continue to the upside. For example, you have a market that makes an impulse, okay, from a low to a high. The market tested the 78.6, then the 61.8, then the 50%, then the 382, and just exploding to the upside. Now in this case, obviously we had only 2 steps, but it's still very strong indication that the market will make a push to the upside and create the W formation. Now, what did we have from a weekly perspective? Now, on the weekly time frame, it was pretty clear that we wanted to see the push up. It was probably the most clear situation that you can have in the market. The market makes a push to the upside, creates a reaction to an area, meaning that the market had found strong resistance here, then broke it to the upside, retested it already with one candle, and what do you expect? Explosion to the upside. This will happen over and over and over again in the market. So everything was pushing to the upside. There was absolutely nothing pushing to the downside. Now, when it comes to entry, obviously, and also for direction, there are many things that I can't share, obviously, because those are specific rules of our strategy, specific entry strategies that we have. And obviously that is part of the mentorship program. It's part of what I do with students, and I can't share that. I try to give as much education as possible for free, but some things I just can't say them. So taking the entry here, the only thing that I can tell you is basically it was clear that we had strong resistance here. The market had broken to the upside, and on the retest, it was very easy to take the long to the upside. Now, if you remember, how do we take the target, okay? How do we know that this was the overall upside target? Well, it was very simple. It's the same thing that I already told you, right? If you have an impulse and you want information on the retracement, you take your Fibonacci from the low to the high, right? If you want information on the next impulse, how do you take your Fibonacci, right? From the low to the high, always previous leg. So which will be the previous leg from a daily perspective? It will be this one here, right? If we go back on the daily time frame, you will clearly agree with me that this was the previous leg. So simply taking your Fibonacci from the low to the high, what do you get? Minus 27. Look at where the market stopped. Exactly the minus 27. That is how the market moves, okay? Creating impulses and corrections according structure and Fibonacci levels. And that is how, as a swing trader, you can actually trade consistently in the market. So the market hit our target, then made a nice retracement to the downside, and then overall, yes, the market made a push up. Okay, now we spoke about how did we actually take the position with students with a very high risk to reward. Now let's speak about what we can expect next for this pair. Just a quick reminder, make sure you comment below and you let me know which pair you would like me to cover in the next video or which topic you would like me to cover in the next video. Okay, so what is the situation at the moment in the market as we are speaking? So we already spoke about one thing, okay? The market did create this W formation. From here we have down, up, down, and the market created this very nice overextended W formation. So above the previous high here. So very nice overextended W formation. What do you expect after a market creates this pattern? Well, what do you expect is the market to make a move back to the neckline, and the neckline in this case, you can call it neckline, or clearly what is it? Is the previous resistance now turns support, right? Is the previous resistance here now turns support, and the completion of the pattern is when the market goes back to this level, a pattern that you will see complete over and over again on all time frames. Now, if we go back and see what we have with the new report that hedge funds have shown us, what we can see? Well, what we can see is that finally they were already closing longs, right? We already spoke about it, but we knew that they hadn't been shorting yet, which means that they wanted to short from a higher level, right? We already spoke about this. And in fact, what we see with the new report, they have added 3.7K shorts and obviously continued closing their longs. And in fact, what about the net positions? The net positions went from 22K to 12K. So clear decrease in the net positions. So overall, from a daily perspective, we definitely want to see the market go back and head to the neckline. If we go and see what is going on from a weekly perspective, what is happening? When on the weekly time frame, we have again more confluence for this. Why? Because the market has basically completed the impulse correction and impulse pattern to the upside and has tested a very high strong level. What do I mean by a very high strong level? Because this level here, if we go and see what is basically on the monthly time frame, is clearly a major high, and obviously the market is supposed to react to this kind of levels. So let's go and see what is the situation from a monthly perspective. Okay, on the monthly time frame, what we can clearly see is a market that has tested the previous high. Was a high here, and now the market tested exactly the previous high. Now, what do you expect after something like this? Clearly, you expect the market to make a push to the downside. Specifically, why? Look at the pattern. The market went down, up, created a lower low, creates an equal high. What do you expect? It's pretty clear. You expect the market to make a push to the downside and complete which pattern? Complete this inverted head and shoulders, right? So you want to see this push to the downside to complete the inverted head and shoulders. And this is perfectly in alignment with what we have also from a structure perspective, because the possible creation of the right shoulder here is exactly basically at this very strong level of structure, right? There was support here, against support, and you definitely want to see the market go and test this level Again, considering the hedge funds are also selling the USD. So we definitely want to see this push and then possibly another push to the upside. But first, let's move step by step. So monthly, weekly, and daily are showing a push to the downside. So everything is lining up. We know our direction. Perfect. Now, as usual, guys, in the market, you have to be reactive, okay? You can't be predictive in the market. That is very, very important. You have to understand this. You cannot predict the market. What you can do is react to what the market is showing you. So how we have to be approaching this? Well, the first thing that we have to acknowledge here is that the market from a 4-hour perspective is still above structure, okay? At the moment, everything is bullish. The market is above this previous resistance here, which is now turned support at this level. So obviously, can you be looking immediately for a short? Obviously not, right? You have to have a clear set of rules that you're following when you're trading, that you know that are tested, you know that they work, and by applying them over and over again, you know that you have a statistical hedge over the market and you will be sure to always be in profit in the long term, obviously. So how we will be approaching this with students. We know the direction, we have to wait for one of our valid entries on the 4-hour time frame. If you don't know which are your rules for entry, then you have a big problem, okay? Because you're not trading, you're actually gambling, and there's a big difference between the two things. So what we will be doing with students, we will be monitoring price action on the 4-hour time frame inside of this area. First of all, waiting for the market to break the structure to the downside, and then we can be looking for an entry. So what we will be doing with students, monitoring price action inside of this area, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a good risk to reward and good probabilities for the push to the downside, retesting the neckline, and obviously trading is all about probabilities and risk to reward. So that will be the best thing that you can do, right? But on the other side, if on the 4 hours the market will just keep pushing to the upside, what do we have to do as traders? We have to adapt to the new market situation. So if on the 4 hours you will see the market just keep pushing and pushing and pushing, obviously we must let the market do its thing and adapt to the new market situation and see possibly, I don't know, we can be shorting from a better price, but always be reactive, never be predictive. At the moment, since everything is showing a push to the downside, we will be monitoring for a push to the downside. If it doesn't come, we will just be monitoring the new structure that the market has developed, and I suggest you to do the same. If you enjoyed the video, make sure you smash the like button and comment below. It really does support the creation of more free education and analysis for all of you, since it helps with the YouTube algorithm. And make sure you also go and check out the mentorship program. You find the link in the section below. It's a very complete program. You first get all the rules of my strategies and then you trade them live with me. Each and every day you get a new daily market breakdown showing you exactly how you're supposed to be applying the strategies with the entry, stop, take profit, as well as getting me to answer every question that you have each and every day in video format, giving you a complete explanation of any doubt that you have. So I will invite you to go and check it out, or go and check out the next video.